Huge statistic coming in for gold after the first half of the year telling us this isn't just a rally. It could actually be something else. Gold just wrapped its best first half of a year since the start of the 2008 financial crisis, up 27.5%. It's a run from right around $2,625 in January to just above $3,300 at the end of June. So if you're cheering for a price run, you've had a fun year. You've actually had a fun year and a half, but it's not all upside. Of course, some of the factors driving the gold rally, especially this year, are negative macro factors like regional wars and unexpected trade policy shifts, the bad stuff. And speaking of bad stuff, there's a big green elephant in the room that we should probably take a look at. During the first 6 months of the year, when gold ran nearly 27.5%, the US dollar fell 10.8% on the Dixie. And that's the worst 6-month decline since 1973, which is 2 years after the gold-backed Bretton Woods system was scrapped. That was when Nixon ended the direct convertibility of the US dollar to gold. So we haven't seen this kind of run on gold price in nearly 20 years. And we haven't seen this kind of drop in relative dollar strength in more than 50. So if you're trying to plot this trend out into the future, well, it's a good bet the fall on the dollar isn't done yet. Provisions in the big, beautiful bill are projected to create an additional $3.3 trillion in debt over the next decade. So more debt, that leads to more dollars in circulation, and that means further drop in the value of each individual dollar. Now, I'm not here to try to convince anyone about inflation and the value of gold. There's no exact direct correlation between the two, but falling dollar value supports higher gold price in several ways, as we've clearly seen the past few years. Now, quick shout out to channel sponsor Summit Metals. If you're looking for gold and silver, they've got a great place to find it, summitmetals.com. Now, this is all really good context for any kind of short-term movement for gold price. There are a few factors that could slow this rally down over the short term, but maybe pulling off the strongest first half of a year in 18 years is a good enough start to allow a little bit of a correction with no real complaints. I'm sure any of us buying this at the retail level would be happy for a price pullback. And actually, I'm starting to think that calling this whole thing a rally is just wrong. If we had to label what we've been seeing the past 18 months with gold price, it isn't a rally as much as it's a transition. What do I mean by that? Well, the biggest moves into gold aren't happening the way that investment capital pours into the stock market. It's more of a defensive move. So fear drives capital into gold, greed drives it into the markets, and the price gains in gold are largely driven by central bank buying right now, specifically Eastern central banks, as they roll capital out of the dollar and into gold. Now, if we flip to the more speculative markets, we see that even though I'm not calling gold an investment in the traditional sense, this past 6 months, it's definitely performed like one. Gold is up 27.5% compared to 5.5% for the S&P 500, 4.5% for the Dow Jones, and silver was in there at 26%. It really took off the end of June. And that's not just a 6-month anomaly. If you take it back to the start of 2024, it's 63% for gold, it's 53% for silver, it's 30% for the S&P, and it's 18% for the Dow. So we could say gold is getting more time in the headlines than normal, but it's not enough. Now, this kind of relative performance with gold outrunning stocks and beating tech, it doesn't happen often. It's not normal stuff. I feel like I'm saying that a lot lately. It tells you, though, that something bigger than a rally is happening because gold doesn't compete on dividends or earnings or innovation. It just kind of sits there, right? Shiny rock, according to Warren Buffett. Now, for fun, let's pull up Bitcoin's year-to-date performance because it is an investment. It's supposed to grow, and it's up 17% year-to-date. And this should really make gold's run even more notable. Gold is outperforming growth stocks and crypto and really everything because, again, it's the top-performing asset of the year. And this is at a time when the market's making new all-time highs, and Bitcoin is at a new high as well. At least it was in this time frame. Ethereum, by the way, is down 23%. Now, getting back to what's driving all of this, the big buyers have been at it for years. Central banks are on track to buy 1,000 tons of gold again this year, which would be the 4th straight year of those massive purchases. 1,000 tons per year. Those are record levels. And it's not about value in the way that a retail buyer might look at this. It's about changing asset allocations. So again, hard to call it a rally. Maybe it's more of a reversion to the way that gold was looked at 50 years ago, not as a trade or a hedge, not as an investment, just a foundation. Now, I'm not trying to get into weird territory here. The point is simply that people are starting to treat gold differently. You don't trade a foundational asset, you build on it. So all the speculation on year-end price or short-term consolidation, the predictions from the bank analysts calling for $4,000 gold or $3,000 gold, well, none of it seems to mention this overall shift, the kinds of moves that really we haven't seen in decades. So this first half of the year was historic. Gold's best first half in 18 years, dollar's worst half in over 52. It's a huge story with very little coverage. The headlines, they all seem to be about tweets or this month's job numbers or retail figures, missed rate cuts. So I was thinking, if nobody's telling the story straight, well, we might as well give it a shot here. Gold didn't just have a good 6 months. It outperformed everything, stocks, crypto, bonds, all of it. And it did that while the dollar dropped the most we've seen in over half a century. So we'll see what the second half of the year brings. But even if gold cools off a little bit from here, the first half is a record that all of us should be aware of. And let's call it good there. So let us know what you think. Is this a rally or is this something bigger? And did you know about that 6-month performance either for gold or the dollar? Both are wild. Let us know in the comments. And then while you're there, be sure to hit that like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you want to hear more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.